Hi, David here with Futures Trading. We had our first session yesterday. All right, and this is price action reading real time. All right, so we're going to have a section right here for you. The channel is all about Universal. I like Universal because it's applicable to all cases. Now, I'm going to show you where everything is at so you'll already know and be familiar with the channel if you're new. I want you to start here if you're new. Absolutely. If you haven't placed many trades or definitely looking to start placing trades, this section is absolutely exclusive for you. It really is. Now, must watch list, timeless information. Everything I put on this channel is timeless. You can come and watch it as much as you want. Let me show you this. This is our library. So if you would like to be a part of the community, sure, you can do that. I do have a lot of traders here. I'm looking for professional traders, polite people. That's all. That's professional, being polite. So I'm looking for polite traders. I'm not sensationalizing trading. Every thumbnail that you'll see here, I want to say this here. Every thumbnail that you'll see here, I'm giving you a brief rundown of what the channel is all about. If you want to learn everything, click that welcome button. Everything you see here is thumbnails of the chart we went over. So I don't sensationalize trading. I don't have no fancy intros. I want to let you know that the trading community here is just, again, for you to learn. This is not, anything to entice you to be a trader because I don't want you to lose all of your capital. The goal of the channel is to make sure that that doesn't happen. So I try to make that pretty much evident from the moment you look at the video, and then click on it and start viewing it. I'm trying to make it really apparent that you're supposed to learn. So I'm wanting to do just that. Universal trend, universal price action method, universal chart scale. And I don't want you to mess with this. If you're new, don't mess with this stuff. All right. Don't you can watch it, but please don't try to go counter trend in the market. Please don't do that if you're new. Leave it alone. All right. Now, trading guide. Again, it's just the same information kind of up at the top, but there's a few more videos in here, just some other stuff that I've covered. All right. But we're going to get to maybe just a little bit of that before it's all said and done. There's a live trade section down here. All of my trades, you'll see me enter them. All right. So there's no now the video is running and I'm already in it net positive. So you won't get that experience with my section down here. I do not do a lot of live trades because my finances are personal to me and there's a lack of appreciation for what it is that I deliver via education. So I don't plan to entice you. Again, don't want to keep showing you me making money and you don't know how to make money. That is not fair to you. All right. So being able to appreciate education makes a lot of sense, all right, because then you can of course exploit the market as well. So I don't enter any trades and then start recording. That's not what I do here. All right, so you'll see me take live trades and lose. All right, so if you're a new trader, surely you know what losing is, or if you want to begin trading, you will get to know what losing is. And so I take losses and I go back and get the money and show it to you all in real time. So you'll actually see me hit the button. Business account, PA accounts, I've passed prop accounts in 23 minutes. I've done it all. I even done 1,000 ticks in this trade right here. And the most recent video here, again, you can watch me take the live trades, lost money here, went back and actually got that and a whole bunch more. So I don't make emphasis on this section because that's not what the channel is about. It's about education, but it is down here at the bottom should you want to take a peek and you can tell somebody else because I don't want to have to say this every video. All right, now let's get into the material. Again, again, the channel is about learning. So this is your section right here. I'm gonna have just a few videos here for you. So session one, this will be session two. Let's get into it. All right, so I got just a little bit more information than what I had yesterday. All right, and all we're going to do is read the price, the hard right edge, and we're going to give an estimation as to how far it's going to go. Matter of fact, let me do this because I definitely wanted to. That's the whole purpose of the video today. Let me click on this just really quickly here. I want to scroll down because I had a question on yesterday. I did, and now let's take a look at that. All right, so the video here, we had a question, all right, and then I wanted to make emphasis on every candle is a trend, so I wanted the individual here to know that when you take in trades, you should treat every candle as a trend. And I'm trying to find exactly where I stated that. Do forgive me, I read a bit slow, talk a bit fast. It's just that way. All right, so yeah. Think of each bar as a trend, so you don't want to see your trend being taken out. Trend distance, sure, but not the trend, which is your prior bar. So you shouldn't mind the trend distance being wiped out sometimes. I'll say it just depends on how large that is. but definitely not the trend, the thing that created it. That's not what you want. So, great question. So glad that you had that, and I hope that I made sure that I satisfied that, and I believe I did. I know you replied, so thank you so much for doing so. But that's what we're going to talk about today: how to look at the candle, the candle. All right. So again, appreciate you guys for doing that. But before we do that, let me go ahead and state this for you. A mentor is someone who teaches or gives help and advice. Now, here's the thing. Now, I don't care about how old or young you is. That don't matter. This the fun part right here. Okay, gives help and advice. Now, if I advise you and it cancels out your help, okay, then I'm not a mentor. It's just that simple. And I suggest you take a look around your social circle and begin to consider whether or not the people around you is doing a great job at mentoring you. So if they're giving any kind of advice, if they're administering any kind of advice and it's canceling out your help, if it's removing the fact that you need the help and you're still in need of help after they start talking, I can assure you they're not the mentor, and you should maybe consider listening to someone else. So after spending time with me today, if you do not find that anything that I'm saying is useful, this is not the channel for you. I suggest that you unsubscribe and go find somewhere else to spend your time, because you shouldn't waste your time. Time is an allotted portion at your disposal, suitable for a purpose, and I want to make sure that you understand that. I'm here to help people, and that's the only reason for the information. All right. Now, there's some other content on this page. I'm not going to discuss it, but you're more than welcome to read it. All right. There's some other information here, but this video is all about this. So we're going to try to spot this in the chart. That pattern right there, we're looking for that. That's how you read the hard right edge. So we got it right now. The mid, that's the mid of the bar, current bar, the live bar that's moving right now. That's below that low. That's suggesting that this could be a hard stop, and you just don't want to see price come back and close above this bar. What are we aiming for? We're going to aim for the same distance. We're going to do the bar by bar thing today. We're going to aim for the same distance of, let's go with this. Let's go with this. This is the trend, and we're expecting it to go at least that much further down. Okay, we're going to make it simple. All right, so this is a trend. Each bar is a trend. All right, I stated that in that message there to the individual there. And so, my fellow professional, and so I want to make sure that that's happening. All right. So here's the okay. There we go. So it made that right. Okay. So that's simple. No sooner you pull up the chart, you can get however many ticks you would like to get out the market. If you just want 2 ticks, 5 ticks, 20 ticks, I told you I've done a trade. Let me show you where that's at one more time so you'll know, because this right here is simple. It's not complicated. I'm gonna prove it. I'm gonna prove it to you that it's not complicated. So if I'm willing to tell you information, information that can, of course, you can exploit, you should know I can do the same, and I'll prove it to you by pointing to you. I've gotten 1,000 ticks in one trade. Not a whole bunch of trades, but 1,000 ticks in one trade. You can see me do it live right there. All right. So there's the distance. And you can just keep repeating that process if you would like to see if it'll do it again. And you can get again 20 ticks, 5 ticks, 2 ticks. We don't care on this channel. We don't care how many ticks you get. I'm only telling you that that's down there because some people want to know, can I trade? And so it's down there. I was thinking just reading it in real time could prove that. And I hope that you know that that's the only way that you can prove to yourself as well as the public, if should they be, I don't know, apt to understand it. You are someone that can absolutely pull money out the market if you can just read this hard right edge and say where it can go. You can absolutely do it. Whether you're in the trade or just reading it to someone, you can absolutely make the money. It's just that simple. You shouldn't have to place a live trade in order to convince someone that you can actually do it. Convincing someone that you can do it is just being able to tell them where they can get in at, where they can hide their stop, and how far it will go. And if the market does just that, you just prove to them that you can be profitable. It's just that simple. We're going to repeat the same steps for the next couple sessions together to prove to yourself that you can do it as well. It's not about whether or not I can do it. Oh, no. It's about proving to you that you can do it. All right. So you're going to want to prove to yourself that you can do it. So let's listen to the market. It got really close. All right. So now let's do this. This is a trend. This is a trend. And we're going to go over our diagram in just a second because I got a diagram for you. All right. So this is a trend. It can go the trend distance. Okay. It can do just that. All right. So it got close to the other one and it's close to this one. All right. So let's see if it can hit this and then we're going to go over our diagram. No sooner you pull up the chart, I say it in so many videos, I don't have to look left. I've been trading for a very long time. I don't have to look left, and I can teach anyone how to read the market and not look left. You don't have to do that. It's really simple. You start looking left depending on how much time you want to spend in the market. All right. And that's when you start looking left because there's a chance. There's just a chance. There's just a chance. All right. I hope you saw that. Now, if they're not going to go up, and we're going to talk about this diagram in a minute. If they're not going to go up, then from that close, from this close right here, let me get my crosshairs for you. Hold on. Let me get my crosshairs. From this close, you can expect the range of this bar, or let me give you this one. You can expect that, which will be back through the back of this bar because they're not going to just kiss the back of it. So go ahead and expect the whole range. All right. So from that close, you see they went roughly about that far. Now, are they going to go back and do that distance? Because I believe we were right about there on that distance. All right, give or take. So let me make sure though. Let me make sure. Yeah, that's roughly about right. So let me just throw that right back there. Now, let's go over our diagram really quickly. I want you to be able to read this in real time. I just need to move the candles out the way so we can address this. We're going to talk about this too. We're going to get, but we did that in last session. We're going to do it here as well. We are, but we're going to talk about that. This is a trend from this wick, okay, down to here. That's a trend down. That's a trend down. I don't have fancy names for bars. I don't do any of that. I'm only talking about fluidity. This is the market being fluid. It was up here at the top of this wick and it went down there. Now the bar did close because this is a time chart, so the bar closed. But this is a trend from top to bottom. That wick right there. So when the bar closed, you can expect that same activity to this side. It wants to go down. However, if it plans to go back up, here's your or it would do that. It's just that simple. Now let's take a look at the other one. So you get distance this way or again, it can go back that way. Now, this is the same thing here. This wick right here, okay, that's a trend back up off of its low. So you have a trend back up off of its low. It can do that same distance moving forward from that close. All right, from that close, it can go even further. And that's just that distance, repeating this. Or it can go the totality of this whole range of this bar, okay, which will put them just a bit higher or it can go back the other way. All right. So it's really simple. So each bar is a trend distance. Really simple stuff. All right. Now they made this, they made it. Now let's take a look at that diagram, the thing that I just spoke of. This. Let's take a look at this. You see this wick. All right. So let me measure the wick. All right. Let me measure it. All right. So let me get the correct measurement here. I think it was right about that. So right about that, give or take. From that close, well, it kind of moved up a little bit. It kind of moved up from the close. They absolutely went that far. So you can consistently take trades in any direction. That's the thing, any direction. One chart, not a whole bunch of charts, one chart. You can consistently take trades in any direction and it should go that far. The market is fractal, it's always moving. It's always moving. So you can do it in any direction you want. Now, the only caveat, now this is what I'll tell you. It's really simple. It's not a problem. I promise you. I'm gonna tell you something that's really simple. Once this candle close, that is your trend. So if they're going to do the trend distance, the chart kind of moved on me there. I'm gonna move this back over. We're going to spend some time together and I want to make sure that you can read the chart. Once this candle's closed, this one right here, it has absolutely no business taking out your trend in order to give you your trend distance. That's the only thing I need you to keep mind of. That's the only thing I need you to keep mind of. So when it stops, when the candle stops, let's go up here. When this candle stops, it has absolutely no business coming back past this high if it's going to offer you this distance of this wick downward. It shouldn't come back past the trend because we're trying to do trend and trend distance. Now, let me give you the diagram if you're new. We are absolutely only capable of doing this same thing every day. thought, action, habit, character, destiny. That's what the mind does. It thinks. All right. Now it does a whole bunch of other stuff, but the actual function of the mind is to think. That's what it does. Whenever you think of something, you always have the end in mind, which is the trend distance. You'll always have the end in mind. The thought is the trend. I have a down actual template for that, but I'm gonna explain it to you just like this. So you always have destiny in mind. So the market is not creating these bars without knowing exactly how far it's going to go again. It is absolutely not that. I don't care what no one tells you. That is not it. That's where you get your ATR. Well, what do you think the ATR? Now, if you don't know what the ATR is, and you knew it's the average true range. So what it is, it tries to get the calculation of a certain amount of bars. I'm gonna tell you right now, you don't need it. The ATR is calculating trend distance. That's all it's doing. And I'm telling you what the trend distance is because the market is telling it to me. And I want to make you aware of what it is that it's telling me. It's telling me this, so I want to share it with you. Whenever you have a thought, you have the end in mind. You know exactly what you want when you think of it. All right. So you know exactly what you want when you think of it, and it should show up if you begin to act on it. So that's the same thing. All right. Now I want you to know the same thing. Now let me do it from this side, and we're gonna get back to real time, but I want you to see that whole process. When this bar closed, it has absolutely no business coming back past here if it's to offer you the distance of this wick. Okay. It don't have to do the whole distance of the candle itself. It doesn't have to do that. Remember, the trend itself was from here, from the wick, the bottom of the wick, to where the bar closed. That's the trend back up. Now, from of course, from the close upward, it went even further, it did. But from its high, you got to think from its high, it went down first. So it was a trend down first. It was a trend down first. So it's still a downtrend from above. From below, it's an uptrend. It's wiping out the downtrend. It is. And so from here, expect the distance of this uptrend moving forward. Now, if it can go right back past that downtrend, so when the bar essentially, opened here, pushed up and came down. If it wants to wipe out this downtrend, which is at the top of the bar, that's totally fine. But do expect at least the wick moving forward. Expect that. Okay, now you can expect the whole bar if you want, but should it not want to make it, I want you to understand why. That's all the only reason why I'm telling you the wick side. If it don't want to make it, it's because the distance of the wick from the low back up to its till it's open is the trend. I'm sorry, I said close. To its open is your trend off the low. So if it comes from below, come back up to its open, it's trending back up. So you can expect the distance of this trend from its low to back to its open, because this is a bull bar, to show up moving forward. All right, it's just that simple. All right, now, so every bar, hope I'm making myself clear here. Every bar is a trend. Every bar, every bar. So let's go with this one because we had a trend. Every bar is a trend. Let's see if it is giving us the trend distance. It's almost there. It's almost there. I know this one kind of fell a little short. There we go. Now, and of course, you can see that the size of this bar. Now, let's say you wanted to take this one and you just pulled up the chart and you're just trying to get in it. So you can expect that. So for every print, because remember, now let's do it again. Now we're going to flip the scenario real fast and then we're going to talk about what I just wanted to talk about there. All right, so there's the wick. Okay, so we're going to expect for it to go here. Okay, from the wick, from the low of the bar back to its open, it can go at least this far should it want to trend back up. All right, so now we're going to talk about that little teeny bar. Now the little teeny red bar prior to that one, the green one there, let's talk about that one. From the low, it's kind of the same thing I'm about to talk about now, but from the low here, okay, to the close is this one, this the red guy, so it's the close this time. You can expect this distance of this wick to show up behind the bar. So that means you would have got stopped out. If you would have took it and put your stop right there, it would have stopped you out. Just that simple. Or you aim for the distance of the bar. You can aim for the whole distance if you want. Back down. You can do that. Absolutely. Now let's see, will it get here all in real time? We do not have to look left. We don't have to. Now you can, And I'm gonna tell you, it's okay to. You can absolutely do that. My whole job right now is to prove to you how to read real time over and over and over again. And this is the stuff that I teach on a regular basis. It's not complicated. I can assure you it's simple. It's simple. I want to share this information with you in a way that you can digest it. It's very simple. It's not complicated. I can assure you. So now, same thing. This is a trend. Let's say you didn't get it from below. This is a trend. Let's see if it'll do trend distance. Let's see. Now, if it start coming off its high, what we're going to do? What we're going to do if it start coming off its high, we got to measure it because that begins to be a downtrend. All right. So that begins to be a downtrend. And so what we do, let me just kind of broaden this a bit so I can grab it. Let me broaden that. Let me just kind of shrink it. This depends on. Let's say it still wants to go up. Let's say it still wants to go up. All right. But it's going to go back down for a moment. Hold on. I thought they was going to close right there. Now, of course, I'm going to have to shorten this a bit because that wick is just a little bit shorter. Oh, so here now, if it closes, there it closed. It can go through the back of this bar. And so when you talk trailing, because I know that was the question, being able to trail it. When you talk trailing, if you come too close to it, you can get knocked out just off of the ebbs and flows of it. Because remember, the market is fluid. It's not still. It's not still. So if you're still waiting for it to get there, that's why I tell you you can let it knock out your trend distance, just don't knock out my trend. So if it wants to, knock out, the attempt, because we're not there yet. So if it wants to knock out your trend distance, which is pretty much this right now, that's fine. Just don't knock out my trend. You knock out my trend, we're doing something else. So as you try to trail the market, if you're trying to trail it, I'm going to cover this. I really want to give you guys the simplicity of this stuff. There's a lot more I can tell you, but I can assure you that this right here is good enough to get anyone where they want to go. Absolutely, bar none. So I wanted to move it. Okay, they didn't knock out that low. They didn't. I'm pretty certain of that. Let me just move this out the way really quick. Nope. Let me see. Maybe they did. Hold on. Look like it came a tick under 72, 472. So the L is the low. 472.13 low. 47. Yep. So they kicked that stop off of that green bar. So yes, you would have got absolutely stopped out. Now let's see if it'll make that distance. Now remember the wick, it's our diagram over here. Remember the wick. This is a wick on the bottom, so it can create the distance of this wick from the close, or in that case, the close. Yes, the close on that one. So, sometimes it's the open if it's the bull bar. It can create that distance of that wick moving this way. All right, so it's really simple. It's not complicated. If you want to know how to read it, I'm gonna tell you how to read it, and it's simple. Now there's some clearly there's some information I'm leaving out here, but I want to let you know this is the best way to go about pulling up a chart and knowing how to get right in there and go at it. All right. So it did went this distance. It did go the distance of this wick. It did. It absolutely did. That would have landed them right about here on the distance of the wick of this red bar. All right. So it would have absolutely made the trend distance of that red bar. It would have made it. Actually, it made the whole bar itself. So it absolutely made that distance as well. We're just waiting to see can we get the trend distance from this bar here. So we want to try to get the trend distance from this guy right there. That's the one we're waiting on. But on the way, they're wiping out a downtrend because remember, this bar just trended downward. It just trended downward. Now, it didn't supposed to go through the top. It didn't supposed to do that. So it's not offering you trend distance to the downside. It's still on its way back up. Now, what can you expect to the upside? I know it's kind of crazy. I know it's kind of crazy because it's so tiny. I can't even get the thing to do it. I can't even get this thing to do it. It's so small. But it trended off of its low. It trended off of its low here upward to the open. So that distance actually it could just show up from here to there, but it kept going. So if you want, you can take the total of the bar. Let's take the total of the bar. Let's take the total of the bar. Your expectation needs to be proportionate based on where it came from. All right. That's and where it stopped and became something else. So we're going to go with the close. So let's go with the close, which will still land us here. So the total of the bar, I just measured the total of the bar from high to low, and I placed it on its close, roughly, give or take. All right. So I placed it on its close. And so the moment that it broke the back of that wick, I know I got to cover it up, but the moment it broke the back of the wick, we're going for the distance of the total of that bar. And it should land us pretty much in the same spot. And so we're essentially we're reading it right now on this hard right edge and knowing how far it can go. And I'm giving you bar by bar today. That's what we're doing. We're going to do a little bit of the other stuff too, but I want to make a great deal of emphasis on that. Now remember, it was a trend from the high of this wick, and they didn't break it when they pushed up on it. So guess what? You can expect that distance from the high of this wick down to the close of that bar back down. And so that's where you're getting your retrace back into this bar. It's based on the distance of the high of this wick down to the close of this green bar. That's your retrace back down. Essentially, that's trend distance back down. Do it have to, of course, break the back of here? It don't have to, because remember, this bar is this bar is a trend in its totality, and they did do the trend distance. That's the whole trend distance. It just did not get past the high. This bar is a trend. It is a trend, but they can knock it out. They absolutely can. But this is now let's talk about the other diagram. Now let's talk about this one. The mids are falling inside of the prior bar. That's rotation, but it's still trend distance. And I told you guys on yesterday's video, you can go back and watch it, that the market is always producing trend distance. And I'm gonna prove it to you today. It's always doing trend distance. It's just not doing it in the way that I'm essentially telling you to read your time frame, because I want you to be able to get more out of it. But if you're a scalper, if you only want two ticks and you want to throw whatever you want to throw at the market, I suggest that you start out very slow, very slow. Use one and do what I'm telling you. Use one. Don't go crazy until you get this really understood and down packed where you can do it with your eyes closed. The moment that you can understand the fluidity of the market, that's when you can absolutely exploit all fluctuations. You can. Your stop would need to be proportionate to the trend distance. You don't want to have a wide stop. People that widen their stops do not understand trend distance. All right, so that trend, okay, they couldn't quite get there. Which, if you, if you're new to the channel, you don't know this. I teach trend distance. That's what I teach. Oftentimes, once they make the trend, they rotate. Once they make the trend distance, they rotate. So now I'm showing it to you on a very minute scale. It's very tight. What I'm showing you is really tight, but it's still the principle. It's still the function. It's still the mechanics of the market. So when it gets to trend distance, when it gets to the trend distance or make a trend, it will rotate either, because it's the same thing. It's considering whether or not it's worth moving further in that direction, or developing a whole new idea, and let's go to, to that destination, if you will. So for every thought that you have primary and secondary values. All right, so the primary value, I should have put the definition in front of you, or the function of how that works. But can you trust me on this? I know I've done quite a bit over here reading this chart, and you're seeing it unfold. I want you to trust me when I tell you this. This is real. You can go study it yourself. Primary and secondary values, you will value rank the primary thing high. You will rank it very high, and that's the thing you'll try to pursue. So primary and secondary values is what we do. And sometimes we settle for something else because we can't get the thing that we want to happen. And that's the thing that you rank very high. However, if you can get the thing that you want to show up, you're going to pursue that. And that's all it is. That's what the market does, is it has points, thresholds, if you will, where that deliberation goes on. And so that's where you get this, where the overlap come in two bars. Okay, now I'm gonna just try to draw a smaller diagram here for you. You get the mid overlapping, and then all of a sudden, this right here creates this, a lot of back and forth. That's deliberation. That's whether or not we want to continue, primary, secondary value, because the market, it has its value. you know do we want to keep continuing in that direction, or do we want to go an absolute different way? So that's what this is. So you don't need 350 bars to know whether or not you're in chop. You don't, or consolidation, whatever you want to call it. I just call it rotation because that's what it's doing. It's rotate. It's rotation because the market is fluid. It's not stopping. It's constantly moving. But you can know what that movement should produce based on how far it can travel with no interruption. And so that's trend. So if it can travel again with no interruption, I'm 100% certain on this. It will pretty much produce the same thing. It's going to do the same thing that it did before. So it's not random. It's not random. So now let's take a look at it. Let's take a look at it again. All right, we're going to do this bar by bar thing again, and then we're going to broaden the scope and begin to focus in on our original pattern here. All right, so now this wick, that's a trend down. All right, let's see, can we get that distance? Well, they're almost there. Okay, they're almost there. They're almost there. Now let's take a, I guess, an analysis of this one here. Okay, let's say that this, because I know they're kind of stopping right now. Let's see, can they make it close right there? Okay, so that bar, because all I did was measure this bar from top to bottom, and I just put it right here to see if it can make it on that distance there. Now, it did not supposed to go through the back of this bar, so that trend is failing. So it's coming from below the wick from below. Remember, we got two diagrams here, okay? And they made that distance up. Now, what I did was that measurement you just saw, I measured it. I need this line here. I need this line here. You can't be on both sides. That's the only problem with trading. You gotta take a side and be satisfied with what happens. I just measured from this low because when they came off the low, that is a trend up, and you can expect that movement in this direction. And it produced it. It did. See, it went up. The problem is it broke that high. So that creates a whole nother problem. So what you can do is say, well, let me measure this candle from top to bottom, and wherever the candle closed, let's go here because it went outside the back because it didn't supposed to go outside the back of here. Now, if you're measuring this bar, remember, if you're measuring this one, if this the trend that you're measuring, they can take out your trend distance, just don't take out my trend. So let me put a level there for you. So if you're trying to trail it, I'm trying to explain to you how to do that right now if you're trying to trail it. But I do want you to understand the real-time fluctuations that you can encounter by trying to trail the market. All right, so here we go. This is real time I'm trying to explain to you. Now, did it get all the way up here? After breaking that high? It hasn't done this distance yet. It hasn't. Now, if you were aiming, let's say you were aiming for the size of this bar. Let's say you were aiming for the size of this bar. It did it from back here, but let's see if it did it from the close. Yes. So from the close of this bar, but it didn't supposed to go past here. I know it didn't supposed to go past here if you're trying to use this bar for your trend. If you're trying to use that one. But it definitely, if you would have just had your stop here, it would have offered you that distance. Okay. So now this trend here, if you wanted to take that bar as your trend, it just made that trend distance in its totality. All right. So that's how you read that. So I hope that that has been extremely helpful for you. And I'll try to do a little bit more of that while I'm on here. I'll try my best to get back to it, but I want to get into some of this too, because this is what we're primarily looking for. Because the market is looking, well, essentially, the market, you should be looking, the market is moving based on the principle of majority. That's what we're doing. Majority rule states that the minority has to follow the majority. I'm just giving you a paraphrase there. Any opposing party, the minority, has to follow the majority. So I'm wanting to make sure that when you look at the chart, you're looking for the majority. That's important. And there's only one rule I have for you. One rule. So if the market is going down, just look for this. Just look for that. Do not look for absolutely nothing else. If it's headed down, just look for this, and that's it. Look for this bar's mid, the mid of this bar, which is that black horizontal line. Look for that to fall below this bar's low. Should it do that? Should it do that? That's your hard stop bar. This becomes your low, no close bar, and you just don't want to see them close back above it. Now, if they close back above it, it absolutely can still work. It can. It's just it decreases the probability. Why? because of what I just explained to you. The trend that they're making back to come this way to get above that bar, they can do it again. Depending on where they close that, they can do it again, and that will come and get you. And I don't want to see that happen. I absolutely don't want to see it. So based on what I just explained to you, now it should be absolutely clear why the no touch, no close can sometimes stop a person out. So you can get stopped out messing with the no touch, no close. There are some things that I can tell you about the no touch, no close pattern before it becomes the no touch, no close pattern that was solidified that they have no business coming back to get you. And if they do, it is absolutely a problem. I promise you, it's a problem. So really important stuff. But again, this is all about simplicity. We're reading the heart right edge. We started from right here. We didn't look left. We did not look left. And we've been reading this whole hope. Well, we kind of took a pause right here, but we've been reading this whole thing. All right. We've been reading this whole thing because I wanted to talk to you about this over here. All right. So now let's see where we're at. Let's see where we're at. All right. So, okay. Now let's go back to our diagram. We're going to do our diagram here. So, this is the no touch, no close scenario. All right. Well, this is it. But remember what I just told you. Okay. Remember, I just told you, this bar is well, let me flip that. Let me flip that. Don't have no indicators on the chart. We're doing real time. That mid is below that low. So that's the scenario there. Now this becomes the no close price level. This right here. Okay, that's the no close price level. This right here. Now I'm gonna just take that off because now this is the stop. Okay, but that is the no close bar. So if you wanted to come here, this will be the stop. Now, if you wanted to know, because I know the individual had mentioned, my fellow professional there had mentioned, let's go back. I want to make sure I'm answering your question in its totality. I want to do it in real time because that's what we do. We trade real time. We trade the hard right edge. That's what we do. And thank you so much, my friend. I see you left me a message. I will be responding back to you in just a second. Well, once the video is over. Okay. So yeah, you said sometimes you're concerned that it will stop you out. Okay. Sometimes the you would be concerned that it will stop you out. So I don't want you to worry about that. I feel as though I would get stopped out on every trade if I were to do that, even if my analysis and prediction is correct. Yeah. So now the emotional side, and we're gonna talk about that a little bit too. You're gonna have to absolutely train yourself in what I'm telling you. And I mean it's gonna take you training yourself. You're gonna have to don't worry about the money. That's the number one thing. If it don't worry about the money, it, it you're treat it as you're paying for education. Okay? That's all it is. Treat it as if you're paying for education. So when you place your trade, do not expect to make the money at first. Don't do that. I can honestly tell you that's the worst thing that you can do is try to trade and be looking to make money and you're not 100% certain on how to do it. You should not expect anything from the market until you're certain on how to do it. You shouldn't expect anything. Don't. If you put your expectations out there, the market is full of disappointment. It can disappoint you, and it mainly is you that's driving that. To be honest with you, because you're expecting something to happen without the correct understanding. So don't worry about getting stopped out. I want to make sure. See, I'm providing you the understanding now. I'm gonna make sure that you're gonna have it. I promise you. Anyone that's watching this video, you're absolutely going to have the understanding. You will have feelings about this. Don't let no one fool you. You are a human being and you have every right to be, concerned, that, hey, I don't want to get stopped out. I don't want to get stopped out either. I don't take my trades to get stopped out. So it's okay. I promise you, it's okay to have that feeling. I can assure you that's okay. You're human. It's involuntary. You will feel something. And even though I've been doing this for many years, I don't like when I feel as if that didn't supposed to happen to me because I thought I had it right. But remember, the market is fluid. And so it itself is a process. It's a thinking, moving process. So when it changes its mind, it doesn't care about my expectations. And I'm sorry to tell you, it will not care about yours either. And so that's why I'm telling you, don't worry about making the money at first. Don't worry about that. I'm trying to show you right now how if you can just manage that stop and however you want to go about that, If you can manage the stop, which is essentially is the money, if you can manage that correctly, it'll give you so many opportunities, so many opportunities. By the end of the day, you'll still wind up where you need to be. But you just have to control your emotional side of it, not to allow it to frustrate you where you become blind to the reality of what's happening. All right, because emotions can blind the understanding. So once you start operating in emotions and they become too intense, it will blind your understanding. You won't be able to reasonably, logically see what's taking place because now the emotions take control. The thinking of the emotions the emotions that we have a thought process in itself as well. That's why people can act irrational because it's a thought process associated even with feelings. What we want to do is make sure that the logic has hierarchy. So when we go to trade, we want to keep logic in the forefront of our understanding. The only way that you're going to successfully become a successful, profitable trader that can do this for the rest of your life, you got to put your logic as a paramount disposition. I mean, you can never move from that. Try your best to never move from that. That when you trade, you only reach for logic. That this is why I place the trade. It's not about money. It's logical for me to do this. It makes sense. Now you're not a machine. So every now and then, and that's why I say you got to try your best. You got to try your best not to lose yourself when it comes to it. Try not to get all emotional where you can't, and you got to be able to make sure that you keep looking at the chart logically. You got to say, hold on, before I get too mad, I'm gonna try this one more time. And the only way you can do that, I'm trying to give you the information to do that with. I don't care if you have to get a piece of paper and draw what it is that I have on my chart right now. I mean, this diagram right here, if you got to get the little the snap tool, snip tool, and just get you some of this, you know, and I promise you, just write it down somewhere. Have it right beside the computer, if you will. Every time you go to trade, I mean, it's giving you these diagrams over and over and over again. It's doing it. I promise you, it's doing it. It's giving you this. This is where this diagram came from the chart. It's literally me just taking a tool and drawing what I see all the time. I see this all the time. This is all I see when I look at the chart. I see this, and I see that. That's all I see. I don't see anything else. I don't know of anything else. I don't understand anything else other than this because this is all I've trained myself to accept about the market. This is all I've trained myself to accept about the market. I want you to do the same. That's what we're here to do. You're going to do this with me. You're going to do this with me, the new trader, anyone in my community. You're going to do this with me every time I do this session because I'm gonna put a couple more up here, just a couple more. I'm not doing a lot of them because we're not gonna do that. This is not that. We don't need all of that. We're the only thing we need is this chart. That's it. We just need the chart and a couple videos, and I'm gonna prove it. I gave you one yesterday. Here's another one today, and I'll probably give you about two more. We're gonna use the chart. That's all we need. A chartist only needs the chart. Now you can put whatever you want on it, but become the chartist first. Learn to read the chart. And we don't care what instrument. I didn't tell you it's Bitcoin, although I'm sure you can see it's up there in the left hand corner. The market is only moving with Bitcoin right now. We don't care. I don't trade Bitcoin. I don't trade it, but I can assure you I can pull up any chart, any time frame, and I can do exactly what I'm showing you right now because you're going to be able to do it too. Follow along. Make sure you're taking this information serious. This is a trend. See that? That's a trend. If it's not going to go down, it's going that far back to the upside. I hope you're keeping up with what I'm telling you. I really do. I hope you really are keeping up with what I'm telling you. This was a trend from that wick to that close, and it went that far down. It did. It's not getting through the back of that bar. That's all it is. It's not. So now let's see if it's going to get here. From the top of that wick to the close of that green bar, that was a trend. All right. So let me move it out the way so you can see it. All right. So let me get this out the way. That little movement right here from the top of this wick down to that bar's close, that's a trend. And they didn't break the top of it. They went down that distance. All right. So it's really simple. But coming back off this low, should you want to trail the market, coming back off this low to the close of that red bar, that's a trend up. So expect that. So expect just that. So to the close, yeah, and they're almost there. So from the close, which I'm give or take, I'm almost there, to right here, expect that to show up. And that's how you trade the fluidity of the market. If you want to, stay relative to its movement without getting shook out. If you practice what I'm telling you, you watch this video, pause it, practice it, pause it, practice it, keep keep anticipating the next moment. And if you can do it efficiently enough, your emotional state will begin to shift. You'll stop, being so, I guess, I'm concerned. You'll remove the concern because the mind is only concerned based on the fact that it's unaware. That's all. It's a level of unawareness there. And so when you're not aware, which it's kind of a state that it will always be, to be honest with you, because we're dealing with the market that we have to allow it to tell us when. So you're always going to somewhat be unaware because you're not the one creating it, and that's what we are. We create. That's who we are. We imagine and then we create. That don't work here. It don't. We're totally reliant on following, information. That's all we're doing. And so that's kind of like the conundrum that we're in. But if we become excellent at being able to listen, wait, listen, and then implement, you'll see a reward, that's proportionate to your efforts. All right. So I want to say it like that because everybody don't achieve. All right. But it will be proportionate to your efforts if you listen. All right. So you got to listen and then of course implement the thing that was spoken to you by the market. So it's always happening here. And so we can't have preconceived notions about what it is that we believe the market going to do. And so sitting online, well, sitting over the weekend, trying to figure out a bunch of charts before the market is moving and drawing a bunch of lines on the chart, it's absolutely unprofessional behavior. I don't do it, and other people can do it if they want to, and they feel as if that works for them. If that's fine, that's fine. As long as when they take the trade and it works, hey, that's fine. I don't do it. I don't have to do that, and neither should you. I'm telling you a way of not being able to waste your time. I don't want you to waste your time. So I want you to be able to pull up the chart and begin to read the market while it's moving. Just read it while it's moving, and you'll do just fine. And you don't have to know other than these diagrams, so you'll know the different types of movement that can show up, which is just two, because this is still it's still this right here, trend distance with two bars. So that's trend distance, or this is trend distance. That's all this is. All right. It stopped being that when they started doing this. When they overlap the mids. Well, I say it to the nature of distance. So you're not going to get the distance that you're expecting if you're expecting something large. Okay. It's still this. It's just compressed. That's all. It's really compressed, but it's still that. But if you want something large, if you want a broader reach, if you will, if you want a bigger target, you're going to want to look for majority. I'm gonna tell you right now, the minute that this shrinks and you don't see that majority being represented in the time frame that you're referencing, that's when you get this. Now your expectancy of targeting need to be compressed as well. You need to shrink your expectancy proportionate to what's happening. All right. So I want to make sure that I'm saying this right. It's always doing this. Absolutely bar none. That's what I've been showing you the whole time. It's always doing this. It's always doing this. But then occasionally it'll start this, which is just a compressed version of that. So it's always doing this though. It is. And I tried to give you some wicks because let's face it, every bar is not made like this. It's not doing that. And if it's doing some of this. It do some of this too. It does. It absolutely does. And I want you to know what that should produce as well. So this is a trend. Okay. And you had a trend from this, well, let's say this is a trend, also, but you had a trend down. But if this a bull bar, let's say it raced up and then came back down and closed right here. Guess what? This coming back down is a trend. And from below, it's a trend to right here. So it's really simple. Try not to overthink it. It's really simple. I'm doing my best to simplify it in diagrams, showing it to you in real time. I don't have any indicators on the chart. I'm trying to give it to you just as plain as you can, of course, stomach the information. I want to make sure that it's really, really, really simple. All right. So I'm gonna be taking off in just a few minutes. I just wanted to spend a little bit of time with you guys to give you some information that you can go to any chart. And please, if you don't mind, please Don't go watching people's information that's not reading it in real time. This is a job that needs to be done in real time. And if you go and watch their stuff, they're going to stunt your growth. By you going to watch other people's information that's not doing it in real time, I can assure you, you're just making your learning curve that much harder. So if you care anything about yourself, please only watch real time charts or people that can explain the market based on function, not and that, here's the other thing. Make sure that the rules, now I'm gonna tell you this, please don't go watching anybody that want to give you a lot of different specifications. That's not required. This is the one rule. Okay. The chart is only giving you majority. Remember, majority. Let me go get that so you can know for yourself. Because I don't want you to take my word for it. I don't. Just give me 1 second. I'm gonna go get this word for you because I really want you to see it. Hold on. Pray better than I can spell, so bear with me if you don't mind. I'm a high school dropout. I have you know that. So if you don't mind learning from someone like myself, I know it takes a little bit of humility, for some people. They feel they don't want to learn from somebody, like myself. But I have I do read. I do read. Majority rule is the principle that the group which has the most supporters get to decide the rules that all, including any opposing minority, will be compelled to abide by. All right. So I want you to understand, if you are looking at the chart, please look for the majority because they are forcing the minority to follow them. They are compelled. So they're forcing them to follow. So when you get on YouTube, I'm trying to make this a library that you only come here and you only look at stuff that's going to absolutely get you to your independence. I don't want you to be codependent on me. That's why I'm doing my best to tell you, hey, you don't need me. Just look at the market. It'll tell you you really can only get the advice from the market. That's what we're doing together right now. We're doing it together. We're letting the market advise us. That's the only thing to listen to. It's really not me, but I appreciate you spending the time. I mean, I like spending time with you as well. But please listen to the market. Please listen to the market. So anyone that's not doing real time, don't try not to do that. Don't waste your time. Please don't. All you're going to do is make your learning curve harder. Also, if they trying to give you a bunch of specifications, they're complicating your trading. Again, don't listen to them. Look for majority. What does majority look like? This diagram. This diagram. I don't care about a bar breaking a high. It'll turn back around and go the other way on you. I don't care nothing about that. I don't care if it breaks the low. Guess what? It'll turn around and go back the other way on you. The most important part of it is majority. So please, when you look at the chart, I want to say this. Please, I want to say this to you. Please listen to me. You could again have your favorite YouTubers, which I'm not one. I'm not a YouTuber. I'm a trader, a professional trader. You can have all the favorite YouTubers you want, and they can entice you in all kinds of ways. I want to make sure that you understand this. I'm an educator and a professional trader. I want to give you the information that's necessary for you to not look at YouTube videos and wonder where the market is going. The two don't even make sense. I want you to look at the market and know where the market is going. All right. Not YouTubers and then wonder where the market is going. They're not going to be able to tell you. They're not going to be able to tell you. I want you to look at the market. That's what we're doing. We're looking at the market. We're looking at the market, the hard right edge. We didn't look left today. We didn't. We've been reading this. Now in yesterday's video, we did a little bit of left because we wanted to frame out, how to, kind of know how far to go. But today we're doing by bar how far to go. So we're doing just a little bit different today. We're still doing how far to go, but we're doing bar by bar how far to go. Now we have distance off the bottom. Okay, can they go? Yeah, they just made it. Now from here, now let's just do a little bit here. Let's do a little bit here because I think they already made this anyway. I do. Yeah, they made that. Now let's go all the way to the top. Let's go all the way to the top. All right, let's do that. All right, let's do that. Now we can go. Now we can go from here if you want. But I just measured from where it went to where it stopped. That's all, you know. But yeah, we can go from right here if you want, from the center of this uptrend. We can go from that That's the cost of the thought center of the up there. That's the center of that up, and then we can aim it upward. We can do that, come down. Let's go about right there, 'cause that's where they pretty much stopped at. And that'll put them back through here anyway. We can do that. Now let's see if it'll make that. And then from there, I am going to be taking off. And I hope you have enjoyed our time together. We're going to probably do maybe just two more of this. Maybe just two more. One more or two more. We're going to do one or the other. I'm trying to make January like, just some information for you because I want to give you your library. This is your library. You don't need to keep hearing me talk to you about the market. You don't. You don't. You really don't. I'm gonna be honest. Just look at the chart every day. Just look at the chart and implement the same thing. It's simple. It's not complicated. I can assure you, it's not. I'm proving it. I'm proving it, and now you'll be able to again just implement it. You can prove it to yourself every day, and anybody else that's asking you any questions about it, you'll be able to prove it to them too. And you don't have to place a live trade in order for them to know that you know how to trade. That's stupid. That has nothing to do with professional trading. If you can pull up a chart and explain it to someone and know, hey, if you just put your stop right here and go for that, it'll go that far. It doesn't. The market don't care if you're in it or you're not in the trade. The market don't care about that. It's the market. It's going to move whether or not you're in the trade or if you ain't. It's still going to. Well, if you're not, let me make sure that I use the right terms. If you're not, it doesn't care if you're in the trade or not, man. It really doesn't. If you're going to be in the trade, then fine. You're taking away the income, and if you just want to explain to someone, then yes, yeah, it'll still go that far. So it's pretty much the same thing. I know it's like tax time right now. I know it's like tax time right now. So I'm gonna say this about people that want to see you trade. If you're encountering anyone that want to see you trade, give them this example or analogy, if you will. It's tax time right now, so we're going to use this analogy. When you go get your taxes done, if you're not already a tax professional, if you're someone that go to get your taxes done, do you require? Because I don't know how many times this person gonna be able to do this anyway. Do you require that the tax professional that's doing your taxes show you their taxes and do them in front of you in order for you to know that they're a tax professional? How many times can they do their taxes in front of someone to prove that they are a tax professional? That's number one already the problem because they can only do their taxes one time. So whoever they do their taxes for that one time is the only person that they're going to know. That's the only person that's going to know they're the tax professional. So it's not about you doing trades in front of someone to prove to them that you're a trader. You can trade and you can prove that to them just by pulling up a chart and reading that hard right edge. All right. So that's my point there. I wish you all the best with your trading. Take care.